Hello everyone, going to wait just a little bit for some people to join here. Going to be looking at the crazy action. I've already made 4 trades since this wild volatility started. And we're now just waiting for things to settle down. So I'm going to point out some key levels. We're going to look at the big 3 and we'll take it from there. So I'm just going to wait a minute or so for a few other people to join. But we did have some nice volatility first thing. And now we are patiently waiting for a break in this tightening range. So let's start it off here. The crazy action started with this candlestick right here. And I personally got in at 14,900 all in with a market order to not miss any of the rush. And I scaled out on the way up, getting out probably with an average of 15,800 or so. That was just me not wanting to be greedy and knowing the previous resistance was at 16,000. We rejected from 16,000 many times today. So I said, all right, once we get towards 16,000, the bulls are likely going to be pretty exhausted. So you give me a $1,000 gain in 5-10 minutes. I'm going to take that every time. And it was really ironic because we were working on a bullish reversal hammer video and I was just finished watching Jason, Chart Guys Jason. He made an 8-minute video about a bullish reversal hammer and I had literally just finished watching it, and then this candlestick forms, so I acted on it and went all in and we saw the huge follow through. From there, I was all out of my position and watching this dump, and I rebought market order into the bearish momentum, assuming a 5-minute equilibrium pattern was going to come due to what we normally see when this volatility and crazy action happens, equilibrium patterns. So I made another re-entry and I scaled out on the way up again for obviously not as significant a gain, but very nice gains. So then we had multiple 5-minute inside bars in a row. We got a bull break of those inside bars and we went from 15,640 up to 15,900, but then pulled back. So we did get some nice, $260 follow through, but it wasn't the kind of bull break that the bulls were looking for. So I made an entry on that bull break of the inside bar. I got out with very small profit once I saw this bearish reversal, long upper wick of a candlestick form, and I wanted to protect my profits and not give anything back. So I exited with very small profit. And the key point I want to point out this entire time, I've used market orders many times right now, and I have spent thousands of dollars in fees in market orders in the last hour. But that doesn't compare to profits. So my point is, you don't want to miss out on opportunity because you're fearing market orders. When we see volatility like this, everybody that is in this action is using market orders. That's why we see so much volatility. So there are times where you can use limit orders. For example, right here is a third trade I made. I was looking at this $15,000 support. That was our low of the pullback. That's the start of our equilibrium range. So 15,000. So I was looking for a higher low compared to 15,000. We bounced off $15,016. By the time I did my market order, I was in at about 15,150. And then I just sold for a little bit more upside here for a few $100s. And it was again seeing this resistance at 15,400 and me just being very conservative, not wanting to ruin a very nice night of gains. And I already have, I could walk away right now and be very, very happy. So I'm playing it very cautious from here, but it's a very clear tightening pattern. $15,000 is now the must hold level with this double low. We've got resistance at 15,900. And now we are looking to set a lower high compared to 15,900 and watch this pattern continue to tighten up. That's what we're watching for. We do have correlation with Litecoin. It's not as significant in terms of the volatility and crazy range, but there is trading opportunity. All of my attention is on Bitcoin because obviously it's the Bitcoin futures that is creating all this volatility. I just did a video where I was talking with Nuggets News about the futures that were going live, and I was highlighting how the daily chart for Bitcoin is very, very bullish. This is a bull flag on the daily chart. We have 3 long lower wicks of bulls buying $14,000 support and just below it. And everything here tells us the bulls are in full control and looking for continuation. That was another reason that I was looking for a bullish reaction and I was ready to act on this 5-minute hammer when the action really started. Also, the fact that we have been consolidating for 3 days is the market pricing in any fears to these futures trading. So you got to figure that everybody that wanted out before the futures went live, had exited over the last 3 days, and now that they see, okay, we're not dumping and it's not the end of the world, I want to get back in. And that's what we're seeing with this little bit of a rush. So there were multiple reasons that I was leaning bullish, but not going to act on a hunch or what I think is going to happen. I was waiting for the signal. So when I did get in, the risk to reward ratio of this entry at 14,900, my risk was getting out if we hit a lower low. So 14,660 was the low of this candlestick. I was risking $240 on this trade before I would have stopped myself out, and the reward ended up being 1,000. So that was a 4-to-1 reward to risk ratio, and it was, again, just willing to take the risk and eat that loss very comfortably and know that I could make back that $260 at some other point. But having my skin in the game and being in that trade allowed for this crazy volatile action. Of course, I didn't expect it to shoot up $1,000 in 5 minutes, but was very pleased and scaled out, $100 by $100 in the upper $15,000 range. So now we're just patiently waiting for this equilibrium pattern to play out. I like the 5-minute time frame for the best view of it, with these wicks showing bulls buying the dip and bears rejecting the price. And we could stay within this tightening pattern for the next 3+ hours or so. So doesn't need to be any kind of rush, doesn't need to be any kind of entry. Right now, 15,000 is the must hold level, and the must break resistance is 15,900. It's as simple as that. Before that, we were watching this double low of 15,400, and that was our range. We said if 15,400 breaks, it's bearish, and we look to 15,000 as the next support level. And if 15,900 breaks, it's bullish, and we look up to 16.3, the top of this move. We had the bear break of that little double low, and now we bounced off 15,000. So it's just a tightening range, and the price discovery that's going on right now is coming off of all of this volatility, and we will see a clear break and another clear trade to be had later tonight. So that's where we stand. Let's look at Ethereum. Ethereum is boring. You don't want to be in Ethereum unless you are in a long-term trade. And that is, a long-term investment, because there's no volatility. There's no real trading opportunity right now. We are seeing bearish action. The bulls did not see any kind of correlation there, maybe a brief little blip, but look at that dump. Ethereum is not the name you want to be playing. If Bitcoin is seeing hype and volatility and is in the news and is the reason for all of this, action around futures trading, you want to be trading Bitcoin. And the liquidity is great in Bitcoin. And Ethereum right now, I actually traded Ethereum earlier today and ended up taking a small loss because liquidity wasn't good. We had a wide range between, it was a $5 move to the downside before we had any real support, and a couple dollar move to the upside before we had any real resistance. But if you're trading with decent amounts, that's really not comfortable, because to get out, you're going to instantly take a $5 loss if you want to exit quickly. So it took me a while to scale out of my ETH position. And I said to myself, okay, I didn't like that experience. I'm not trading ETH anytime soon. BTC and LTC have gone really, really well this weekend. And so I'm going to stick with what's working, and just that bad situation or bad experience of trying to scale out of ETH, just not interested in that for now. So ETH, just to go over some key levels, let's look at the longer term time frame. Let's look at the 4-hour chart. So we have key support at 440 and then down at 438. If we break 438, it is a clear bear break. Ethereum is not seeing the same kind of bullish hype and correlation that Bitcoin and Litecoin are currently seeing. So again, I'm not interested in Ethereum right now. I still have some long Ethereum that I'm not going to touch for years, but that is not where I want to be if I'm trading. And Litecoin, let's get our range on Litecoin. It's very similar setup to Bitcoin, obviously, with the correlation. Support is 149. I've got resistance at 152.44 and 153 even. So those are the ranges that we're watching. You can see, let me get rid of these lines for just a moment to point things out. But we've got our high of the bull move. Our low of the pullback is must hold support at 148. And our lower high, clear at 153. Our higher low, clear at 149. And now we're watching for this range to continue to tighten, and we're right in the middle of it. So we are currently about $2 above support, and we are currently exactly $2 below resistance. So we are right in the middle of that range. For Bitcoin, our range is 15,000 to 15,900, and we're $50 above the midway point. So we're getting very, very tight. There's all kinds of inside bars we can be watching on the shorter term time frames. But at this point, I'm all cash and patiently waiting for this tightening pattern to break. So that is where we stand with Bitcoin, Litecoin, and Ethereum. There is going to be more action tonight. It's not going to be anytime soon, in my opinion. Volume's going to drop off. We're going to continue to settle. and we will look for that break. As far as the futures go, and you know what to expect from here, check out that talk I just did with Alex from Nuggets News. I uploaded it to the YouTube channel right when this craziness started. And my underlying opinion in that was, I think it's going to be a bit of a non-event in terms of, we're not going to see downside action. The daily chart is saying Bitcoin is bullish, and I think we're fine from here. As long as $14,000 holds, the bulls are absolutely in control of Bitcoin. And we've already seen our big correction from 19,700 down to 13,500. That is a $6,200 correction, and that is about 30+%. So if 14,000 holds, the bulls are going to, in my opinion, see a daily equilibrium pattern form. And what we're going to be looking for on our daily equilibrium pattern, we have our range right now between our high and our low of this crazy volatility over the weekend. We're now going to be looking for the bulls to shift momentum in their favor. We're going to be looking for a bullish 4-hour MACD cross. Look at this MACD closing in. We have our low of the 4-hour pullback. Our high of the bounce is this 16.3 now. And we're going to be looking for just higher lows and higher highs on the 4-hour chart to try and head back towards our all-time high. So I'm looking for the daily chart to shift momentum back to the bulls. And once we break these lower highs, 16,300 and 16,500 will be two key breaks. If we break those two levels, I'm looking at 17,777 as the next level. I do believe for this daily equilibrium pattern to continue to play out, if it were to continue to play out and the bulls do take over, I'm going to be looking for a lower high on this equilibrium pattern somewhere around the $18,000 mark. And again, I'm not going to buy a position and hold out hoping to hit 18,000. I'm going to continue my short-term trading style, which has performed wonderfully this weekend, just in terms of quick in and out, back to cash, jumping to different opportunities, and patiently waiting for setups where I'm very confident. If I'm going all in with my position and compounding profits, I'm not getting in any kind of trades where I'm unsure of the setup. So this 5-minute setup for Bitcoin, I'm not going to enter. We're in the middle of a range, because if I want to get in right now, my clear bear signal is down at 15,000. There's no way I'm going to risk a $500 drop before I see a clear bear signal to exit my trade. I'm going to wait until the levels are tighter, so my risk to reward ratio is more in my favor. So patiently waiting is the bottom line. Don't have a whole lot of further update because things are settling down, and they are going to slow down, in my opinion, a bit more. If we see a bear break of this 5-minute inside bar that is currently forming, then that gives this chart a slight bearish lean. And that's going to change it from an equilibrium pattern to a descending triangle pattern, in my opinion, where we have that $15,000 is our base with multiple touches, and we have a lower high pattern heading down to that level. So if that were to play out and we were to drop back down under 15,400, I would look for our new resistance at 15,577 right here at this top. And I would look to pull back and see another bounce just above 15,000 and watch this descending triangle pattern continue to play out, where we would have something that looks like this with another lower high. That's a bad one. Need to get closer to support. So something along the lines of this. Just lower highs, base of support before we see either a clear break of the lower highs and we look bullish, or a clear break of 15,000 and we look bearish back down to our low of 1466. So that remains to be seen. It all depends on this little short-term setup right now, but bottom line, we are consolidating. I'm very patient, not placing any trades right now. I just made 4 trades in the last hour. 2 of them were very profitable, and 2 of them were pretty much a wash, uneventful. And that's where we stand. And now that I'm on here, might as well look at some questions. So I'm looking at the YouTube chat right now. Anybody that wants to ask some questions, I'll answer a few of them. Stay on live here for a bit longer. And there's certainly a lot of action in the cryptocurrency space this evening with the amount of views that these live broadcasts are getting, with mine and other people as well. So in terms of should we hold over the weekend, well, the weekend's already pretty much over. But if you are in a position and you have enough wiggle room, it's 15,000. If 15,000 breaks, I would not want to be in a bullish position. So that would be my stop level if you can give that kind of wiggle room. Everybody that's asking about altcoins, I just put out an altcoin video with 6 tickers earlier today, and IoT was one of them. So just to go over Litecoin a little bit more, it's the exact same pattern as Bitcoin, a tightening equilibrium pattern. Break of 149 is bearish. Break of 153 is bullish. It's as simple as that. The fact that Bitcoin just now broke this 5-minute candlestick inside bar bullish now shifts me back to believing that we are in an equilibrium pattern and not so much of a descending triangle. So that's not really that important as to which consolidation pattern is forming right now. We know we're in a consolidation. We know the volume is dropping off significantly. And if we get a bull break from this tightening pattern that is going to form over the next hour or 2 or 3, we will see a bullish 4-hour MACD cross into tomorrow morning. And we know how those 4-hour bullish MACD crosses go. They are beautiful signals for longer-term swing traders. They're beautiful signals for even shorter term traders. A 4-hour bull MACD cross always convinces me to hold longer. And that is definitely something that I will be looking out for over the next 12 to 24 hours. When you're doing a market buy or sell, and if you're not getting filled and there's a ton of slippage, that's because there's so much volatility that we have a wide spread in the order book. When I'm buying in market order, I'm always trying to strike when I see that there is enough of an ask that will absorb at least half of my market order. So, the asks are always flashing around. The trades that I've been making this weekend, I am literally sitting with my order book open and I am staring at that and I am not moving an inch. I have my order filled out. And I literally have my mouse on the button and I have my finger hovering over my mouse, not touching it because I don't want to give that little flinch by accident, but that's literally what I'm doing. I am staring at the market order, knowing that we're about to see an oversold bounce in some instances, and I just wait for the shift in momentum. And again, I go over this in depth in the cryptocurrency course in terms of how I'm reading this order book, but just the 2-sentence version, I'm watching for a shift in momentum. I'm watching for the selling into the bid to slow down, the market sell orders. I'm looking for them to slow down. I'm looking for the bids to build a little bit, and I'm looking for the asks to begin to thin out. And then I'm looking for the start of buying at the ask. And then I instantly hit that and join the momentum. And a lot of other people see that momentum and then they join in as well. So I would say in the last weekend, which has been, this weekend, I've made 500% of my initial capital investment back in May. But I've been using the order book literally, I would say, I'm obviously using the charts all the time, but in terms of my actual entries and exits, the order book is accounting for 75% of my decision making in terms of when to press that button. So I'm looking at the chart and I know my key levels, but then my focus is literally solely on the order book. How do I think CME will play out? I think it'll be similar. I think we'll see an initial volatile reaction. Right now, pretty much the setup is CBOE futures are going to be for retail traders because the contracts are smaller and the fees are higher. And the CME futures are going to be more for institutional traders because it's 5 Bitcoin per contract. So if you want to be playing CBOE and you want 5 Bitcoin in your contracts, you're going to be paying 5 times as many fees as if you were just to do that with 1 contract on CME. So that's December 18th. We have 8 days. There's going to be a lot of volatility and volume in between then. And I do believe that I don't believe that we're going to see any kind of crazy action because we're also going to have the CBOE futures already in full effect once CME goes live. And CME is going to correlate to the CBOE futures to a degree, in my opinion. I think those will sync up pretty nicely to each other and will balance each other out in terms of, I don't think we're going to see, CME predicting Bitcoin to be up $500 more than CBOE is predicting in the same amount of time. I think they're going to be pretty in line with each other. So back to Bitcoin on the 5-minute time frame to see us tightening up a little bit more. We did break a resistance level, but again, I'm just not comfortable, not confident until I see clear bull volume, a clear tightening break, and we're watching for potential descending triangle pattern. A break of 15,000, and we're looking down at 14,660. In terms of RSI levels getting oversold, we're nowhere near any oversold RSI levels. So if we were to break 15,000 and then break 14,660, that is when we would just start entering 15-minute oversold territory. So again, very patient, and there will be oversold bounce plays, but at this point, just waiting to see what kind of break we get. And the last thing that I want to be holding personally is anything if we break that $15,000 level. I do not use Fibonacci or Elliott Wave for TA. I've played with them many, many times, and they just don't resonate with me as levels that I need. And at this point, to be honest, I'm I'm using less technical analysis indicators for the cryptocurrency space in the last 7 months than I use on stocks or anything else. And it's because I started without moving averages and things were going really well just using price levels, and things can continue to do really well and get better and better. The last thing I'm going to do is add more indicators and more things to my chart to look at if I don't need them. The price levels, the volume, the MACD, and the RSI has all that I've been needing for the last 7 months. And honestly, this style of trading has shifted into how I trade stocks a little bit differently. I'm evolving as a trader every single year. I'm doing things in 2017 I wasn't doing in 2016. And it's just about constant tweaking, improvement, and staying agile to adapt with the markets. And right now, moving averages on cryptocurrency, just don't need them. And, you know, I'm not going to try and make... There's no way I'm going to do anything to try and top these kind of gains. I'm just going to put my head down and keep this up as long as the market volatility and environment is here, because this is going to disappear. This volatility is not going to always be like this. So we need to enjoy it while it lasts as traders. And then once it does drop off, maybe we can get closer to cryptocurrencies becoming more legitimate for uses, because the 10-20% volatility is definitely hindering adoption for fundamental uses for cryptocurrencies. How can I tell when the order book is thinning out before I buy in? Literally just observation. You see a bunch of 10, 20 orders, and then they start to disappear and they don't come back. And it's always these bots flashing, but they pull away and they don't come back. And then we start to see market buys at the ask. And then I instantly press that buy button, knowing full well that worst case scenario, I'm going to eat maybe a $200-300 loss. And that's very easy to make back with the volatility we've been seeing in the past couple of days. So again, it's the lack of any fear. The last thing that I'm fearing is taking a loss. What I do fear is getting stuck, you know, in GDAX and I have a Bitcoin position and then GDAX goes down. I absolutely fear that, but I do not fear taking a loss at all, knowing just confidently that you'll make that back, or I'll make that back. And if you're confident in your technical analysis and trading ability, you'll make that back with the next clear setup. And I want to point out that I know there's a ton of people learning technical analysis in this space. This is one of the more difficult spaces to learn technical analysis. We have clear patterns and all of that, but in terms of the speed of the action that plays out, it is extremely hard to learn in this environment. You know, you want to be learning on a daily and a weekly chart where things are very slow. You have all the time in the world to be thinking. If you're having to make decisions in a 20-second time span and you're new to technical analysis, it's a setup for disaster in terms of, you know, making a ton of mistakes and getting discouraged. The worst thing that you can do is try and trade in a very difficult environment and get discouraged and give up. Because again, this is an environment that more experienced traders thrive in. And, you know, if you're new to trading and you see the gains that people are making, you're saying, why am I not doing that well? Well, it's because you're just starting out and this is an extremely difficult environment. The people that are doing really well have had multiple years and multiple decades of experience preparing for this moment. So they've looked at thousands of charts. They've seen this equilibrium pattern play out thousands of times. It's very comfortable and familiar for them. So don't get discouraged on yourself. Continue to learn and educate yourself. Don't let any kind of setbacks in this environment. You know, you're saying, well, everybody's making so much money and I'm not. That's not the way to be looking at it. Definitely need to be looking at it as a learning experience to prepare ourselves for the next few decades. There are going to be so many opportunities to trade in our lifetimes. We're going to have the US marijuana market, which is going to be 10 times the size of the Canadian market. When that gets legitimate federally, sometime in the next 5-10 years, it's going to happen. And the opportunity that we're going to have in that market is going to be insane. A lot of people are going to retire in that market. So what you can be doing is accruing capital, building your experience and education, and preparing for that moment. Because when it comes, it's going to be a similar moment to this, probably not nearly as extreme, but we've seen it before. I've seen it with the US MJ market twice. I've seen it with the Canadian MJ market twice. And that opportunity comes around every couple of years. And if you are prepared for it, I promise in 1 year, you can smash that opportunity hard and make up for, you know, multiple years of learning where you're not making a whole lot of money. Marijuana futures are coming. Marijuana ETFs are coming. It's all coming. The opportunity is going to be wild. And just wait till we have cryptocurrency ETFs. That's going to be huge. So many opportunities are coming. There is no rush. There is no, I need to make all the money this year. It's to prepare yourself for the next 2, 3, 4 decades of becoming a trader and not even having a goal of, quitting your job and doing this full time. Maybe that's your goal. And if it's not, you can absolutely accelerate your path towards retirement with being financially savvy and confident and, locking away gains and having funds ready for opportunity and things like that. So it's just taking hold of your future in terms of educating yourself and being comfortable. And now Bitcoin is continuing to tighten up. I appreciate everybody tuning in. Going to wrap it up for now, continue coverage in the chat room. And we actually had to disable our free trials for a while, wait for things to settle down, getting a little hectic. A lot of people joining up, which is great. We love having new people, but we're going to wait for everybody to get a little bit settled. We will open it back up eventually at some point, but as of right now, free trials are disabled for the chart guys, and we appreciate all the support. The alert service is still alive and kicking, certainly allowing for plenty of opportunity in this action. And I'll let you know when we open that free trial back up. It's going to be a while, but we are consistently working towards that alert service. Just wait for 2018. It's going to be so much fun. Very excited for that. And everybody that gets into this alert service at this price is going to be locked in at this price. And that's something we did with the chart guys. We have people that paid $100 for a year in the chart guys, and we have people that are still paying, $20 a month because they were with us 2 years ago when our prices were really low, before we added a lot of services, before we added the live webcam. So we're going to continually build on this alert service, and the people that lock in their price now, I guarantee you we're going to up that price as we add the features that we've been working on in 2018 and beyond. So lock in those prices now, and we're not going to update, or we're not going to, increase prices on current members. We've never done that. So I appreciate you all. I hope you have a good rest of your night, wrapping up the weekend. Don't rush, don't fear. If you make a great trade, that's great. Celebrate and take a lap, but erase those emotions before you sit back down and go at it again. And we'll watch this break of this equilibrium pattern again sometime in the next 2-3 hours, and it will be very clear when it occurs because a volume spike will be accompanying that. I appreciate you all, and we will be back sometime in the near future.